Audio Jungle. Audio Jungle.
Momentum investment strategy. It seems that nowadays there are more strategies and tips on how to make money by investing than there are actual investors. I mean, बंदा अभी investing शुरू करने का सोचता ही है कि he starts to get a dozen of different ideas on what the best way of investing is. And one of the most commonly cited and easily misunderstood methods is that of momentum-based investment. But the thing is, as confusing and intimidating as it can be if you can understand the principles behind momentum investments, you will be making a lot of money in no time. So let's sit down today and talk about what exactly makes this strategy so successful, how you can start doing it, and whether it is the right option for you. And if you watch until the end, we'll also be giving you a few special dedicated tools that can put you ahead of the competition in no time. So without further ado, let's talk momentum. Now, if you paid attention to physics while in school, you might have some memory of what momentum is as a physical quantity. Basically, it is the amount of motion a body has, in other words. जब भी कोई चीज़ एक तेज रफ्तार से चले, to the force that keeps it going is its momentum. And the thing about momentum is that an object with high momentum will continue to move at a high speed, even if the force that initially pushed it is gone. Kind of like how a car continues to drive even if the engine stops directly giving it power. And the same rule applies to certain stocks and other assets. You see, whenever a stock does super well for a decent amount of time, it is set to build momentum, meaning that even if the stock's original source of value is gone, its value continues to rise for a bit just based on its initial performance. And this also means that if you're able to judge when certain stocks are gaining momentum and invest in them in time, you can make a lot of profit based on their rising prices without having to worry about the actual business of what you're investing in. Banking on momentum also allows you to predict the behavior of a commodity in the short term, since something that is selling really well will probably keep selling well for at least a short amount of time. And that ability to be relatively sure in a place as volatile as the stock market is a very huge pro. In fact, the so-called father of momentum investing, Richard Dreyhaus of Dreyhaus Capital Management himself condensed the philosophy of momentum investing to buy high, sell higher. But like so many other things, it is rarely as simple as it is put out to be. So let's get into the nitty-gritty of it all, starting with what makes it different. Now, at the most basic level, momentum investing में कुछ नया नहीं है. In fact, at that level, it is basically the same as all other kinds of investing in that the investor invests in stocks and that they think will increase in value so they can later sell them at a profit. लेकिन जो चीज़ इसको बाकी सब investments से separate and in general more profitable करती है, that is in the way the investor judges and selects those stocks, along with the time of the investment and selling. Basically, where a traditional investor will look at the company behind the stock, their business model, management and products, or will judge the industry/market as a whole in terms of growth or decline. A momentum investor will concern themselves with none of those things. Instead, they will only look at the individual performance of a stock in a given period of time. If the stock has been rising well, the investor will invest without any thought to the stock's actual business practices solely based on the fact that a rising stock always rises on its own for some time even if the business remains volatile. इसका मतलब ये कि where traditional investors waste a lot of time on research while dealing with factors that they cannot predict and only see good results in the long term, this technique allows momentum investors to make faster, more technical and more generally correct decisions, which allows them to rise consistently and generate great profits in the short term. And as it turns out, the simple philosophy of closely following market trends and dropping off at the right time turns out to be ridiculously effective. So let's talk about that now. How well does it work? Now, while almost all investors since the beginning of the modern market have been unconsciously following momentum investments, it wasn't until the 1950s and 60s that the strategy became super popular and well researched, mostly because of the efforts of Richard Dreyhaus, the aforementioned Bob of momentum investments. And luckily for us in the 90s, a team of market researchers compiled data from that era until the end of the 80s to see just how well Dreyhaus's strategy had worked. And this study, conducted by one Narasimhan, Jagadesh and Sheridan Titman, found was that during the years between 1965 and 1989, people who followed momentum investments almost always outperformed the rest of the market. Now that is admittedly pretty huge. But if that's the case, why doesn't everyone already do only momentum-based investing? Well, as with every other too good to be true thing out there, there are some very crucial things with momentum investing जिन पे अगर आपने ध्यान ना दिया तो you will not only lose any potential profits but may lose your initial investment as well. So let's now turn our attention to what should we be careful about. Now, by far the hardest thing to master for any momentum investor is greed and knowing when to quit. You see, generally what happens is that when an investor finds a stock that performs very well for them, they start to get a little too comfortable. And even when the stock starts to show signs of losing momentum, just because they want to squeeze out any extra profits, they ignore those signs and keep holding. What happens next is pretty obvious. The stock eventually crashes before the investor has time to react and loses all of his profits, or in a very bad case, his initial investments too. All that could have been avoided if he had just sold on time. And this doesn't always happen because of greed. In fact, just learning what are the signs of losing momentum is a very hard thing to master. And then there's the problem of long-term investments. You see, since momentum investments bases its strategy on momentum, and momentum is always temporary, for people looking to grow their portfolios in the long run, momentum is not the way to go. The same goes for people who want to invest as a side project, since to make sure you're one step ahead of the market, you have to be constantly vigilant. It requires a lot of work hours being poured into investment alone. So unless you're willing to give it your all, don't get into this world. But if you have considered all of those things and think that you have the time and energy to do it, then you, my friend, will make a lot of money by using this technique, which finally brings us to how can you make it in momentum investing? Now, the actual list of things from simple rules of thumb to expensive analysis tools that can help you in judging stocks and knowing when to invest or sell them are practically endless. And we are not going to go into detail on those things in this video. Instead, we are going to tell you about a few of the rules and tools that we think are must-haves for anyone getting into momentum trading. And to understand those, we must first learn the basics of what makes a good investment strategy. These involve analyzing a stock and determining the optimal entry and exit points. Of these, analyzing a stock is the first and most important phase. Here, the general rule is that stocks that have risen or fallen in value over the period of a few months will generally maintain that trend for a couple more. In fact, the study we mentioned earlier found that stocks and commodities that rise or fall for 12 or 3 months generally maintain that trend for 12 or 3 more months with considerable reliability. For more technical approaches, you can even use software-based analysis from services like Average Directional Index or Stochastics, both of which identify and rate a stock's momentum to help you identify the potential reward or risk in an investment opportunity. As for entry and exit points, the first one is pretty simple. The moment you find out that a stock has good momentum, you invest in it without wasting a second. As Warren Buffett has said many times, the potential losses from not doing things are far greater than losses incurred by doing mediocre things. Choosing the right exit point is a little more difficult, however, as you not only need to be aware of the news to know if a stock is going to crash, but also need to be able to identify falling momentum. But both of those can be managed by using the aforementioned tool sets. Now, as you can imagine, there is a lot more to it than just that. But as long as you're able to cover these bases and keep trying to learn more, you will become an expert in no time. And that finally brings us to the bottom line. Now, if you have reached this part of the video, that means that you're not only willing to try momentum investing, but are trying to learn the risks, techniques, and strategies related to it. And if you are successful in acquiring those skills and have the time and energy to apply them, as long as you keep trying to learn more and own your skills without being deterred by any difficulties, the world of investing will be your playground. If by contrast you're someone who doesn't have the time or is very new to the game, then I would advise that you start on the smaller scale with more regular kinds of investing before you jump into the much more technical world of momentum trading. But with both of those things being said, I certainly hope that you will keep trying to learn more about these things so you can become the successful investor you're meant to be. And that concludes our talk on momentum investments. I really hope you guys found this video helpful, and if you did and want to learn more, please feel free to subscribe to the channel and ring the bell icon. But before you click off, I have a trivia question for you. Who do you think is a big fan of momentum investing? Bill Gates or Warren Buffett? And well, on that note, we must say goodbye. I hope you enjoyed watching, and if you did, be sure to leave a like. With that, take care and I'll see you guys next time.